If you want a truly passive source of income, I believe dividends are the best way to go about doing it. Although there are indeed other opportunities out there for passive income, such as owning real estate properties, selling your own book, or beginning a blog, there is really nothing out there that requires so little work to maintain as being able to live off of dividend distributions from your investment portfolio. This is the case even though there are other options for passive income. If you acquire rental property to generate money for renters, you will still be responsible for building upkeep, finding tenants, and evicting individuals when necessary. When you have a blog, you need to cultivate an audience interested in following your site and visiting it consistently. Alternatively, to put it another way, if you want to license your own music, you still need to write songs that people not only want to listen to, but also want to pay money to buy. However, if you choose to invest in dividends, you will automatically have dividend payments deposited into either your brokerage account or your bank account monthly or quarterly. Hey folks, this is Capital Finance, your go-to channel for business ideas, entrepreneurship, investment, and personal finance. Now, according to an article that was published online, to retire at the age of 35 and have an annual income of $65,000, and you need to have a minimum of $3.3 million stashed away in your stock portfolio. Alternatively, if you don't think you'll make it to that age, you simply need to have $2.8 million saved up by the time you're 45. However, if you want to earn $40,000 every year, you'll just need $1 million. Is it really realistic to expect to live well on $40,000 a year until you're 85? If you're 40 years old and have roughly $1 million in dividend stock investments? As you build up your investment portfolio, you will most likely want to reinvest any dividends that you get to accelerate your wealth's growth. But would it be possible for you to use them later on to finance your lifestyle when you retire? If that's the case, how much money do you need to put in before you can live off the dividends? In this video, let's find out all you need to know about this technique for earning passive income, such as how much money you'll need to implement it. Before we start, make sure to smash the like button and let's begin. How do you live off dividends? Becoming financially independent and supporting yourself only through the passive income generated by your assets is a desirable goal, especially if you can accomplish this goal sooner than you had anticipated. Fortunately, there are many ways to create an investment portfolio that can support you indefinitely. One popular option is to invest enough money in assets that pay enough dividends to cover your annual expenses. You will need to establish two variables to calculate the amount of money you would need to invest to live off dividends like this. The first variable is the amount you want to spend annually, and the second variable is the dividend yield of the proposed portfolio. When you have both of these numbers, divide the former by the latter to find the worth of your portfolio. Let's say in the future, you anticipate needing an annual income of $40,000 to provide for yourself and your family. If you think it's possible to build a portfolio with a dividend return of 3%, you may discover the minimum value of your portfolio by dividing $40,000 by 3%. This will give you the number 1,333,333. With this, reviewing your existing expenditures and making adjustments to them if required is the most effective method to develop a spending plan for the future. It is recommended linking your debit or credit card to a digital budgeting tool so that you can automatically track all of your spendings in one accessible area. What is a realistic dividend yield? After you have determined how much you want to spend on an annual basis, the next step is to determine the dividend return that is reasonable to expect from your investments. The dividend return that you might anticipate getting could be anything from 1% to 6% of the total value of the investment. However, individual results may vary. Reviewing an asset's past yields can provide you with a reasonably accurate estimate of the dividends it is likely to pay out in the future. However, it is impossible to know this with absolute certainty. You ought to be able to discover them displayed prominently on the asset's website at your brokerage or utilizing independent databases online, whatever you want to do. How do you assess dividend sustainability? When compiling a portfolio of dividend-paying assets, it is tempting to choose those with the greatest yields. However, this technique is fraught with danger and should be avoided. When determining the value of a company, there are many other factors to consider in addition to the dividend. In fact, investments that offer the most significant returns are not always the safest bets. That is to say that there is a connection that works in the other direction between yield and stock price. When one decreases, the other increases in value. Someone who chooses equities based on their rising yields runs the risk of inadvertently purchasing assets experiencing a price decline, which is a fast way to incur a financial loss. Because of this, you should never add an asset to your portfolio without first determining whether or not its yield can be maintained over the long term. You may, for instance, have a look at its dividend payout ratio, which is calculated by dividing the company's annual dividend by its annual net income. A payout ratio of 10% is achieved when a business generates a profit of $1 million for the year but only distributes $100,000 to its shareholders. How much money do you need to live off dividends? The amount of money you need to invest in making a living off dividend depends on the amount you spend each year and the dividend yield of the investments in your portfolio. Let's look at some practical examples of the kinds of portfolios you may construct to sustain yourself only on dividends from a variety of investments. Mary is a single individual who lives in a part of Berkeley with a pretty high cost of living. Every year, she must spend $48,000 to maintain her standard of living there. She has a high risk tolerance and is not bothered by the prospect of putting together a retirement portfolio that is more strongly weighted towards equities than bonds and includes a substantial number of REITs that offer high dividend yields. She is anticipating that the dividend yield on his retirement fund would be 6% each year, and to make a living from dividends, she will need to invest around $800,000. Given the yield on her investments is 6%. Still quite high? Let's look at this another example. Franco is a person who lives by himself in Texas and spends $30,000 per year to maintain his standard of living in a city that has an average cost of living. In addition to this, he has a risk tolerance that is quite ordinary and is content with a portfolio that has a weighted average dividend yield of 4%. Given that his yearly expenses are $30,000 and the yield on his investment is 4%, he will need to invest around $750,000 to live off the profits. Will it be a wise decision to live only off dividends? While living entirely off of dividends has a certain appeal, it isn't necessary to differentiate between living off of dividends and having an equity portfolio. If you think you can sustain yourself with the income that your assets generate in dividends, this may be the best strategy for your retirement. There may be other options may be more beneficial to you, but if you know this strategy well, then why not, right? So, at what age will you be planning to retire? And what are your plans for it? You can share your thoughts in the comment section below. As always, thanks for watching. And don't forget to hit the like and subscribe button before you go. Have a good one and see you next time.